Hello, Bill Ackman is the manager of Pershing Square Holdings, and he's just pulled off a big deal to take a stake in Universal Music. And in your half-year results, you said it had the potential to be one of your most successful long-term investments. So why are you so optimistic about Universal?
Sure. So the context for the music business is not a great one from the previous peak of the industry in 1999 to 2015, when things started to turn around. And what happened basically is you had a business that was a physical business of selling DVDs and records, and then digitization of music made it easy to pirate, and people stole music, kids stole music, etc. And it became easier and more convenient to steal music than to go to a record store and buy music, and that almost killed the industry. Apple launched the iPod and the download business, which started to replace some of those lost sales, but still was expensive to build get a few hundred songs, and it would cost you $500 to put together a portfolio of music. And then Spotify launched, and it's really Spotify over the last sort of decade that's led to the recovery of the music business, as streaming has become more recently more than half of music industry revenues, and Universal as the best managed and dominant player with a third of global music market share, recorded industry, was the first player to make deals with the Spotify's of the world, and then Apple Music and Amazon Music, Google Music, and the transition to streaming has made this business a vastly better business than it was in the 90s. It's no longer a hit-driven business. It's really driven by subscriber growth. So 450 million people that are subscribed to one of the various streaming services, and they pay a monthly fee. It's a very modest expense compared to what they spent in the past. And Universal gets a royalty on those expenditures. And so it's, think of the business as a royalty on people listening to music, and the ease, convenience, and low cost of being a subscriber will lead to continued high rate of subscriber growth in our view. And then there's been a proliferation in devices, think smartphones, smartwatches, smart speakers, smart cars, that have made access to music streaming more accessible. People are spending more time listening to music. They're working from home, listening to music. And music is present many, many more hours in the day. And so the demand for streaming music is going up. So that's a great environment in which to be in this business. Then you layer onto that what's going on in social media. And, Facebook has gotten in some hot water, if you will, for, promoting anger on the website, if you will, through feeding people stuff that gets them angry, that increases their, if you will, attention, which enables the Facebooks of the world to drive advertising sales. But instead of getting people angry, you can just add music to social media and people spend more time. So the TikTok would not be TikTok without music. And Instagram is with music has become a much more successful sort of application. And so music's really being added everywhere. And that's great for all of the record label companies and recording artists and publishers. But in that context, Universal happens to be by far the best company in the industry. They've got the greatest market share. They've got the best management team. They've got the strongest balance sheet. They've got the fastest growth. This is one of the great businesses ever in our view. And because of the way we acquired our interest, we acquired the interest in a private transaction with Vivendi. They were less focused on extracting the maximum dollar. They were focused on finding a long-term steward for the company, because they were giving up control of the company in connection with the spinoff of the company to shareholders. And, they liked the structure of Pershing Square Holdings. They liked the fact that insiders, including myself, own 25% of the company. I think it reminded Mr. Bellari, as the control shareholder of his own company. Vivendi is 30% controlled by the family. They're long-term investors. And that's what he was looking for. And so we bought a stake. And 2 weeks after we closed, it went public, and the trading price is about 30% above the price we paid. And we still think it's quite cheap.